So Andrea, what if I told you that I could possibly reduce the taxes on your income almost down to zero?
I would feel really good about you.
As opposed to how you feel about me now, I guess. And Andrea, of course, in saying that, as much as we hate for our viewers and our clients to be frustrated about their retirement goals, it is really hard for them not to be frustrated about paying taxes on their income. Now we know that paying taxes on your income cannot be avoidable for a lot of measures, but it doesn't mean that you have to pay more than what you need to Uncle Sam. And so in this video today, we're going to talk about 4 unique ways in which you can reduce your retirement income. So you're going to definitely want to stay locked in today. Hi, my name is Carson Graves, President and CEO of the Retirement Education Center.
And my name is Andrea, Director of Operations at the Retirement Education Center. And the reason we've created these educational videos is to help to make the difficult and confusing retirement process simple.
Yes, Andrea, and we do this quite obviously by embarking on the expertise of our strategic partners, ranging from certified financial analysts, certified financial planners, estate attorneys, insurance advisors, and other needed professionals to help us build a comprehensive and holistic retirement plan that will let our clients know when, where, and how they can reach their retirement goals.
For specialized strategies on how to maximize your retirement income, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos.
So, Andrea, before I even start talking about anything dealing with taxes, it's very important for me to let everyone know that, hey, I am not a CPA. I am not an enrolled agent. I am not a tax preparer. I'm not a tax accountant. So I have to make that known. We create these videos for educational purposes only. You will certainly need to consult with your own tax advisor about anything dealing with your own particular taxes, because obviously taxes are very, very complex and it can vary from state to state. So please understand that this video is not for the intended purpose to give you tax advice. But in saying that, Andrea, we totally understand that the tax code can be complicated, but the framework of the tax code is very simple in how it's designed. The more income that you make, the more your taxes are possibly going to be. And also, you can have different types of income, from capital gains to dividends, which we're not talking about in this video, that can make things even more complex. But with that being said, there are some very unique and simple ways that you can actually utilize to reduce the taxation on that income. And we utilize this for our clients every day, and it may just be right underneath your nose as well. So we are going to talk about that in today's short educational video. But before we do that, there are 2 rules to retirement income that we always like to give you. And what are those 2 rules, Andrea?
Well, rule number 1 is to never run out of money, and rule number 2 is to never forget rule number 1.
So let's go ahead and quickly talk about some ways in which you may be able to reduce the taxation on your income.
So you're talking about how to reduce your taxes, and the first thing on the list is starting a business. Could you tell us more about that?
Absolutely. So when we're talking about reducing taxable income, Andrea, the reason why I have starting a business on the list is because when you have a business, you can literally write your income down to 0, because there's so many things that you can write off, from depreciation of that business, from marketing, from your mileage. You just think of it from any type of, if you're doing dinners relating to that business, travel expense, even repairs on your cars, the income that you pay your employees. All of those things you can literally write off on your business, of course, to help reduce the taxation on your income. So, I'm an S corp, so I can write off anything that I do related to this business, including having someone to do our YouTube videos. We can write that off. So that is definitely a number 1 ticket item, if you're able to do it, to start a small business to help reduce your taxable income.
You also have on your list contributing to a 401k. I also have a 401k, so tell me more about that.
Yeah, absolutely, Andrew. I think sometimes people forget about the impact they can have by contributing to their 401k. As you may or may not know, you can contribute up to $19,500 into a 401k. And if you're 50 and older, you can actually contribute up to $26,000 into that 401k. And all of that money that you've contributed to that 401k will literally not be shown on your income taxes. So let's just keep it simple here. Let's say, for instance, you're making $80,000 a year. You decided to put $10,000 in that 401k. The amount of income that you will actually report to the IRS will only be $70,000. So you already have a $10,000 income tax break just in and of itself right there.
So Carson, what if I was making $19,500 and that was my income? Could I contribute all of that to my 401k? You mentioned something like that.
Well, Andrew, that's a really, really good question. Yeah, if you were making $19,500 or you were making $26,000 if you're 50 and older, and you wanted to say, and you were blessed enough to be able to defer all that income into your 401k, you could literally show no income for that year. As a matter of fact, depending on what else you have going on, you might even get money back in that case. So you really have to think about this factor of not only being a great thing to do for your long-term retirement solvency, but it's also great to help reduce taxes on your income as well.
Well, next on your list is that you can contribute to your IRA. What can you tell us about that? Good.
So this is another factor. So we've talked about starting a business, which we know everybody can't start a small business. But these other things you absolutely can do. Your 401k, we talked about that. But when we're talking about your IRA, Andrew, it really falls in line with like your 401k. With the one main factor is that you cannot put nearly as much into an IRA as you can your 401k, which is why we like to always tell our clients to do that first and do something else on the outside of that. But when it comes to an IRA, you can put up to $6,000 in an IRA. And if you're 50 and older, you can put up to $7,000 in an IRA. And depending on other factors, all of that money could be written off on your retirement income as well. So we did a video on traditional IRAs or Roth IRAs that I would highly encourage you to go see, so you can see exactly how you can meet the requirements of being able to write your IRA income off as well. So another good question.
Good. All right. Well, next on your list is contributing to your HSA. I have one of those too, so tell me about that.
So Andrew, this educational video is going to suit you very well. So HSAs, or health savings accounts, really do fly under the radar. You don't hear a lot of people talking about them, but as you said, you have one, and I think it's a really important thing to have if your company is offering it. It's important to utilize it as well, because to me, HSAs, they give what we call a triple effect on taxation. You can put money in pre-tax. That means that money goes in without you paying any taxes on it. You can also let that money sit in there and grow tax deferred. So that money can be placed in an account much like an IRA or your 401k, and that money will literally grow tax deferred on your behalf until you get ready to use it for a qualified medical expense. So when you pull money out of an HSA for a qualified medical expense, guess what, Andrew? That money comes out tax-free. So you got the tax free coming in, you got the tax deferred growing, and you got tax free coming out if you're using it for a qualified medical expense. And any money that you put towards that HSA can be deducted from your income as well.
All right. Well, thank you.
Yeah. So what I'm going to do, Andrew, here, I am going to now share my screen for the last talking point to bring all of this together so you can literally see an example of how doing any and all of this may work for you. All right, so let's go ahead and talk about some really unique ways in which you can actually reduce your taxable income. And these things may be right underneath your nose and you may not have realized what you can do here. So let's just take our characters that we always see in all of our videos, Mr. and Mrs. I Don't Know. Let's just say they're age 44 and they have a joint salary of $100,000. Now, we're going to also just assume in this hypothetical example that they both are going to max out their 401k. So they're both are going to put $19,500 into their 401k in 2021. So at that moment, that's $39,000 that could be completely written off that income. Let's also say they have an IRA. As you know, both of them can actually max out their IRA and put in an additional $6,000, and combined that's $12,000, in which could also be written off that income. And let's also just go ahead and assume that they actually have an HSA account and they're going to put in the maximum of $7,200. Because Mr. and Mrs. I Don't Know was being very, very smart about their saving habits, they have taken their $100,000 of income and written it down now to $41,800. But they're not done. If you're taking a look at a married couple, in 2021, the standard deduction for a married couple is $25,100. So you can also write that off. And so there's still some other things you can write off that we're not going to talk about in this video. Like I mentioned, I'm not a CPA, I'm not an accountant, I'm not a tax preparer. So these are things that you would want to talk to your particular tax advisor about. But we're just going to keep it very simple here. The standard deduction of $25,100 will also come off of that adjusted gross income. So now their taxable income is $16,700. From $100,000 to $16,700 is taxable income. A very, very smart way to reduce any of your taxable income that you have. So as I always say, no matter what your case may be, always consult with a financial advisor or a tax advisor or an attorney about your particular situation. So I really hope that this educational video gave you some insight into how you could possibly reduce the taxation on your income. Please remember that these videos, again, are created for educational purposes only, and that you would need to consult with your own tax advisor or your own tax attorney or financial advisor about your own personal situation. Also, if you are looking for a fiduciary financial advisor and you want to become one of our high value clients, please click on the link provided in the description area below. For more information about this topic and any of the other topics that we've discussed in our prior videos, feel free to reach out to our office or leave any questions or comments in the section below.
To learn more about our services and how we can help you to increase your chances of not outliving your retirement savings, make sure to click on the link in the description below and sign up for our free Maximizing Your Retirement Income Masterclass. After this video, please check out our other videos that will give you tips on how to maximize your retirement. Also, if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers.